So we're going to kick it off with the company that's probably been the most talked about company in our space over the last 12 to 18 months. And we've got someone who was actually there at the very beginning. Before Marcus was even conceived, he was at a meeting that Goldman Sachs had to decide what they would do with this banking license that they had. And so it's great. It's going to be great to get Omer up here to talk about that, because he's been at Goldman Sachs for over a decade, and he's seen Marcus from its initial conception all the way through to the success it has enjoyed today. And we're going to talk a lot about that. So ladies and gentlemen, please join me in welcoming Omer Ismail from Marcus. Thanks, Omer. Good. Okay, have a seat. Okay, so let's just maybe just kick it off by giving us a little bit of update about what's new at Marcus these days.
Sure. Thanks for having me. So 2018 has been a very pivotal year for Marcus. We launched Marcus, as you know, 18 months ago, and 18 months later, we have transitioned from a single product lending site to a multi-product platform. Today, you can go on Marcus and get an installment loan, save 500 basis points relative to the rate that you're paying on your credit card. You can get a home improvement loan, help you finance any home improvement project that you have. You can open a Marcus savings account. We just brought that under the Marcus umbrella at the end of last year. Actually, just today, we increased the rate on a high-yield savings account to 1.6%. Relative to what consumers are getting on their checking account, which in many cases tends to be zero. And over time, we expect to add additional products to the Marcus platform. The one thing that is consistent across the products that we have today and anything else that we might add in the future is we want to make sure that we're offering customers value. Clearly, they care about that. They care about that in the lending product. They care about that in the savings product. And we want to do it in a way that's simple and customizable and really transparent and not gimmicky. And so that's where we are with Marcus. Okay, and so can you give us some sense then of the scale you guys are at today? Because I know you've been growing very rapidly, but what's the latest on where you're at? So since we launched loans 18 months ago, we've originated approximately $3 billion. We have 20 billion deposits under the Marcus savings umbrella. That was an acquisition that we made about 2 years ago, a little less than 2 years ago. And today, Marcus has about 500,000 customers across those two products. Okay, so that is a pretty decent size. So, I mean, when I hear that, and it's great you're growing so fast, but the question mark that comes up to me is, what about loan performance? Because we don't have any window in that. You hold these loans on your balance sheet. You don't go out to the public markets at all. But can you give us some sense of where you guys are at with loan performance? Sure. So, right from the start, the directive from Lloyd on down at the executive office at Goldman has been grow prudently and at the end of the day, it is a credit business, and you have to take into account your pricing and your net credit margin. And so we're very cognizant of where we are in the credit cycle, how we're originating these loans. As you said, they are for our balance sheet, and so we pay a lot of attention to credit quality. Today, the performance is relatively in line with what we projected it out to be for the $3 billion of loans that we've originated. The one other thing that I'd say about just the way we underwrite is, we're constantly looking at data, both data outside as well as, the data that we're collecting on our customers. We've have had multiple iterations of the credit model, as you would expect. We change it very often. In many cases, one of our advantages is the ability to change it a lot faster than the way a traditional bank might be able to change it. And we don't want to be in the business of over-leveraging customers. And so the ability to pay calculations, in addition to all of the credit factors, are a really important variable in how we think about originating loans. Mm-hmm. Okay. So then, as we look at the competitive landscape today, obviously we've got a lot of the online lending platforms that you do compete against, and you've also, it seems to me that Marcus has kind of caught the attention of some of the larger banks. But when you look at the competitive landscape, what is the view inside Marcus of the different parts of the competitive landscape? Yeah. No, there's no question that there have been new entrants in the space. We want a lot of these new entrants to succeed because in our view, it credentializes the category. As you and I have talked about, Peter, we did a lot of research talking to customers in the build-up and the launch of Marcus and since then. And the fact is that our number one competitor is customer inertia. 3/4 of our loan customers did not even know that a product like this exists that could save them 300, 400, 500 basis points on their credit card debt. We're offering 1.6%, as I mentioned, on our savings account. Again, we did research. 60% of savings customers in the US don't even know what they're getting in their checking account or what they're getting in their brick and mortar savings account. And so our job is to educate our customers and give them the information and the tools to be able to make the decisions that will ultimately improve their financial lives.
And it seems like when you read the press, and there's certainly been a lot of press written about you guys in recent months, but you hear about your CEO, Lloyd Blankfein, he keeps talking about Marcus, talking about the importance of this sort of the consumer and this consumer-facing business that you guys got. I mean, I guess what can you tell us about how Marcus is viewed inside Goldman Sachs? We get Lloyd Blankfein, but what about the rank and file?
Yeah, the one of the things that excites me about Marcus personally is I feel that when I come into work every day, I have 30,000 fans across Goldman Sachs that are cheering for my success. This is a new business for Goldman. We obviously, for 149 years, have been a B2B institutional firm, and the business is very different. Lloyd on down, the executive office, the senior leaders of Goldman are very committed to the business. We really see our advantages, and you spoke a little bit about this in the intro. We really see our advantages in the fact that we are a bank. We became a bank coming out of the crisis, but we don't have any legacy technology. We don't have any legacy business model. We don't have any legacy products. And so we really have the ability, with all of the benefits of being a bank and having the heft of Goldman Sachs and the scale and the capital of Goldman Sachs behind us, to be able to create a 2017, 2018 consumer experience. And we've done that in our loans and our savings products. And as we look to add additional products to the Marcus platform, we'll follow the same ethos.
So let's talk about that for a second. I mean, you've obviously started on one product, the debt consolidation loans, on that side of the balance sheet anyway. We obviously have the deposit product, but I'm guess how do you view other products, and how are you kind of you're obviously doing things fairly quickly. There's been a lot happening over the last few months. What can you tell us about your plans going forward, and how is that pace going to continue?
Yeah. So the first priority that we have today is really to grow loans and savings. We really feel like we're in the first innings of what we can do with those products. On our loan product, as I mentioned, we have now offering it to folks and marketing to folks and educating folks around the benefits of it around home improvement. We hear a lot from our customers in terms of additional products, additional features and functionality that they want from our loan product and our savings product. And as I mentioned, we just brought the savings product under the Marcus umbrella. So first and foremost, lots to do there. In terms of what else we might do, we'll look for areas and products where we feel like Goldman Sachs has a competitive advantage and their unmet consumer needs. And so in that vein, there's a lot of stuff that we're evaluating right now. We're looking at revolving credit. We're looking at potentially credit cards. We're looking at wealth management products. We're looking at retirement products. So a lot of things in the lab, a lot of things that we're evaluating. But that's kind of the litany of stuff that we may add to the platform.
Well, but then you've also got you announced, well, it was announced in the press about you acquired the small business lender Bond Street. You acquired San Francisco startup Final, which is in credit cards. So can we read into that those two things? I mean, you mentioned credit cards, but if you're acquiring those companies, aren't you going to be? Doesn't that mean you're going to be launching those products?
No, I wouldn't necessarily read it that way. There's a war for talent going on, and I think we focus a lot in Marcus on recruiting top talent, and acquisition hires or acqui-hires have been a very important acquisition of talent initiative for us that we've done. So we were able to, as you said, pick up the team at Bond Street. We were able to pick up the team at Get Final. We actually just launched a San Francisco office that's basically going to be engineers. We hired Jeff Winner, who was the former head of engineering at Stripe. He's going to be heading up our San Francisco office, and a lot of the Get Final team that we acquired that was Bay Area based is actually going to be based in that office. So as we look to grow our business, focusing on talent and getting the right people in has been an important area. And one of the things that I see a lot is, there are some awesome fintechs out there, great talent, very interesting products, but for one reason or another haven't scaled. And they now have an ability to come to Marcus by Goldman Sachs, where they're going to be able to they're not coming here to fix something, they're coming here to build something new. And they have the ability to do it, as I mentioned, with the scale and heft of Goldman Sachs behind it. And so we're active in the acquisition of talent space and looking at other fintechs like that.
So is the San Francisco office really just going to be engineering type people?
Yeah, it's going to be the vast majority of it's going to be product and engineering.
Okay. So then, what? I'm interested in, like, not just in I know you have a Salt Lake office, you obviously have a New York office, and now a San Francisco office. What are the talent you're hiring today?
Every single one of us that's in this room, every single one of the people that we interview see how kind of broken financial services is in their daily lives. Some of the folks have worked in fintechs or other financial services places, some haven't. And every single one of them is attracted to come to Goldman Sachs, come to Marcus, and try to create, as I mentioned, a new type of consumer financial services experience. The thing I'd say about the talent is that, I've worked at Goldman, as you mentioned, close to 15 years. I used to dress like you. Now I'm the one wearing the jeans and you're the one wearing the suit. It's a trade that I've happily made. There's certain things Goldman Sachs won't compromise on. We want, in all of Goldman's businesses, we're client-centric, we're consumer-centric. That's first and foremost. We won't take risks with legal and compliance and regulatory matters. We're a non-hierarchical culture. But other than that, when it comes to Marcus, there are really few rules. And our floor looks different, our dress code looks different. The San Francisco space that we got in WeWork looks nothing like Goldman Sachs' investment banking or merchant banking office, where I spend a lot of time. And so we're trying to create a culture and an atmosphere where we can attract the right talent, and people are motivated by what it is that we're creating and how we're serving the customers.
So it's a pretty competitive market here in San Francisco for engineering talent. And it's interesting that you hired somebody away from a tech firm. And do you see that as a trend where you're going to have, it used to be, the people went to work from or towards the banks. Goldman Sachs has obviously had a phenomenal history and was very much sought after in many ways. But there's been this trend that banking was sort of, it's not really innovative, it's not really new, and let's go work for a tech firm. It sounds like maybe things are moving. Do you think that's fair to say?
I think that, I'll give you an example. Every one of our engineering teams starts with a customer phone call that went well and a customer phone call that didn't go well. Something that in our product, the customer was annoyed about, unhappy about, wasn't able to do, and wants to get it fixed. The engineers that we are attracting, Jeff in particular, I took his name, he was the head of engineering at Stripe as an example, is attracted to coming to Marcus and being able to serve the customer. These are folks that are that we've attracted that are very mission driven, and again, I don't think that other banks would have been able to attract people like that, because you're not coming to Marcus to fix something, you're coming to Marcus to build something new, and that people find very attractive. And so there's no question that acquiring talent is hard. It's an area where I personally spend a lot of my time. But I think if you look at the examples and where we've succeeded, It's that advantages of being a bank but with no legacy that I think really resonates with people.
So do you then, when you think about it, when you're talking to the potential hires, do you sort of picture yourself, we're really a fintech platform, just has to have a massive balance sheet and massive backing, or, I mean, how do you kind of communicate what is the core of Marcus culture?
Yeah, the way I talk about it is we're a startup inside a 149-year-old firm. And come to Goldman Sachs, where the firm has now invested over $500 million in Marcus, expects to invest more as we grow, and you have the ability to work on something that will make a real difference in people's lives and be able to scale.
Mm-hmm. Okay, so then, for the fintech companies that are out there, and obviously we talked about two acquisitions that you guys made, but how are you looking to? Are you actively looking to make more acquisitions in different areas of weakness, or what are you looking for when you make an acquisition? I guess what's behind my question is, for those companies in the audience that might think, well, maybe Marcus should buy me, what are you looking for?
Right. So, Marcus so far today has been a good mix between acquisition and organic. We started the lending business organically. We acquired the GE deposit platform, which we brought under the Marcus umbrella. We acquired it 2 years ago. We've obviously done acquisitions of Bond Street and the Get Final team, and so we're active in that space. I think for us, the first decision is, is there a significant, our criteria for entering a new business is, are there significant customer pain points? Do we believe that Goldman Sachs, and Marcus, given its emphasis on technology and risk management, has a competitive advantage relative to the other players that are out there? And then we look for large markets and large profit pools for us to enter so that it can be a meaningful business for Marcus and for Goldman Sachs. If it fits those three criteria, as I talked about the additional things that we might consider, it has to be at the nexus of all three of those criteria. Once we make a decision to enter something, then honestly we think about whether to acquire or whether to build. And if we find the right acquisition target, we're certainly open to it. And if not, then we've proven the ability to hire the right talent and build it ourselves.
Because you say those things, and I think there's still a lot of opportunity in all the different major areas of finance, where in retail, like obviously you got mortgage, which is it's a massive business. We had Jay Farner up here earlier, and companies like SoFi are doing that. I imagine that's you got to look at that and still think there's a lot of potential for your business. Right?
Yeah, no, look, there are consumer needs and pain points across every one of the products that I mentioned. Right. For us, it's just a question of where do we see the most immediate need, what makes the most sense, where can we leverage the capabilities that we have built in terms of how we think about additional products that we might add to the platform. But again, I do want to come back to a little bit of what I said, which is, even for the products that we have today, we really feel like we're very early in the evolution of what we could do with them, what our customers are looking for, and how we can grow and build them further. Right.
Well, as you say, I think it's great because you've got so many people didn't even, you said 75% of your customer base didn't understand that the term loan could exist for them, and I think that's something that I think where we all need to get out there more, and I think it's a case of a rising tide is going to lift all boats.
Absolutely.
And, that's when I talk about others. They say it's good that Marcus is here because you're doing a lot of the work that is helping the whole industry. So
no question.
So we're almost out of time, but I've got two more questions. One is, you obviously you've been gone 18 months. You've had a massive trajectory. Are you on the trajectory you set yourself out to be, or are you going faster or slower?
The directive from our senior leadership was build it right, go slow, do this right, and that's the directive that we've been following.
So you've been going slow?
Look, from the time that we wrote our first line of code till when we launched was 11 months. We've been in the lending business now for 18 months. We've originated $3 billion, which is relatively on track to what we thought we were going to do. But again, we're a balance sheet lender, and so we're not focused on just the next origination. We want to do this right, and we want to do this prudently. Keeping in mind where we are in the credit cycle. One of the things that Goldman's publicly talked about is a $1 billion revenue target from Marcus 3 years out, and so far we're on that plan.
Okay, so we only have 30 seconds left. What's next for Marcus? Where are you? What is it going to look like here the rest of this year and beyond?
Yeah, look, Marcus has been a lot of firsts for Goldman. It was a new business for Goldman Sachs when we started it 18 months ago. We had our first NFL ad. Our first lending campaign was Debt Happens. Our current lending campaign is Don't Get Feed. We launched it in a comedy club in New York. We're actually doing another event today in San Francisco. So, it's been a really fun journey. It's exciting to have transitioned Marcus to a multi-product platform, and where we're really focused is growing customers in our existing products and any additional products that we might decide to start. And then there's been a lot of growth in people. As I mentioned, we started in New York. We had an operations call center in Salt Lake. We've now opened a new operations center in Texas. We're starting our San Francisco office, and so that's really over the course of the next 12 to 18 months where we're focused.
Okay. Well, Omer, thanks for talking with us today.
Thank you.
Okay.